Welcome back, you guys, to Andy the Baker Show. We have a lot to discuss today. We just witnessed Liberation Day, and you guys have been liberated from your stocks in the stock market because holy cow, that was something to see. So many stocks going down. We need to discuss about that. I want to share my thought process going into Liberation Day and what happened during Liberation Day and what I believe is going to happen after Liberation Day. We also got to talk about my Costco stock because this is a stock that seems to be going up even during the worst of times. And I'll give my reasoning on why I believe it seems to do so. And then we also need to discuss about my Robinhood stock. It has been going down tremendously ever since Liberation Day, has already been going down 10%. And then lastly, we need to give an update about Google stock. Let's talk about first about Liberation Day. Going into Liberation Day, you guys, I was completely wrong. I actually thought the tariffs were priced in. The reason why I thought we were priced in is because Trump has kept on talking about 25%. This whole time in my head, I'm thinking, all right, 25% tariffs, but then we'll probably meet somewhere in the middle and we'll get maybe around the 20% or 15% tariffs. But then the, would you know, freaking Donald Trump, he brings out the chart, and the first country on the chart, China, is at 34%. The moment I saw that, I literally was like, holy cow, we did not price this in. We were pricing in a 25%, but we now see a 34%. And then a couple countries down, you saw Vietnam at 46%. A lot of the shoes that is made and sold in America is actually created and manufactured in Vietnam. You talk about Nike. Nike's already down 10%. Why? They make a lot of their shoes in Vietnam. And what's so ironic is that they used to make their shoes in China and we pushed them to move to another country, Vietnam. And then now we're essentially doing the same thing to Nike again, having to make them push to move their manufacturing places to another country. One of the craziest things about Liberation Day is that there's so many countries that's impacted. You have Cambodia, holy cow, 40+%. You have Taiwan at 32%. Newsflash, I thought Taiwan is supposed to be our allies, but China and Taiwan is basically getting tariffed at the same rate. That was surprising. You have the European Union getting tariffed at 20%. I thought they were our allies. I was expecting a 10% on that. All of this in my thought process changes everything because we were expecting lower tariffs, and now that we have 30% tariffs, 40% tariffs on some of these countries, we're essentially cooked. We have to reprice all of that in. Now, one of the things you're going to realize is that when you look at the chart that Donald Trump has showed on the blue side, where he is stating that's what the other countries are in tariffing us, well, there's a lot of disputes on that because economists and other professionals, they're asking Donald Trump, hey, how did you get the formula to get these percentages? How did you know that Taiwan is having 60% tariff? How do you know that China is having 60% tariffs on us? How do you know that the UK has a 10% tariff on us? Well, that is the big dispute that is occurring in the stock market and in the political world because people are saying that the formula that Donald Trump used to calculate those numbers that US is being tariffed at, essentially, they may not be the accurate numbers to calculate tariff rates, right? We have an issue there, but nonetheless, that part does not matter because what matters is the tariffs that has been implemented already, the tariffs that is on the yellow side, the tariffs that Donald Trump has announced on Liberation Day. Now that we have witnessed Liberation Day and we've been liberated from our retirement saving, we've been liberated from our money, here's what I'm believing. When you look at the countries that are being tariffed the most, you look at Vietnam, you look at Taiwan, these tend to be countries where our US companies manufacture the most. You take a look at Vietnam, for example, right? Vietnam has a lot of Nike manufacturing going on. And essentially, in my thought process, Donald Trump is not tariffing the country, but essentially giving the companies a choice. For example, Donald Trump could be saying to Nike right now as we speak, like, hey, do you want to deal with the 46% tariff, or do you want to go ahead and manufacture your shoes inside the US? And that same deal could be given to TSM, for example, right? Taiwan Semiconductor say, hey, do you want to pay a 32% or a 34% tariff? Or do you just want to move your manufacturing to the US? And then so on and so on. You could do that with Toyota, you could do that with Hyundai. Just so many manufacturers that sell in the US, those are the ones that are being the most heavily impacted by tariffs. Now, this puts these companies in a very tricky bind because some people are saying, hey, this is only for 4 years. You can just pay higher tariffs for 4 years and then you're good. You'll be back to normal. Well, how do you know that? How do you know that the next president is not gonna just follow suit with what Donald Trump has gone planned with, right? How do you know that everything is going to reverse? The issue is you don't. Right? And Donald Trump right now is making a clear case, mathematical case that, hey, look at the financials. If you do a cost-based analysis, that you actually move your manufacturing from those other countries into the United States, you could be saving a lot of money in the long run. Because if you don't, then good luck. You're going to be paying those taxes. Now, when you take a look at the chart, you're going to realize that Canada and Mexico are not on the chart. All right. And there's a very particular reason for that. It's because they have their own agreements going on. For example, they have the USMCA. So for those two countries, Canada and Mexico, you will not be seeing them. They will do their own negotiation later on. And you will also see other countries not on the list. For example, you will not see Russia on the list. You will not see North Korea on the list. And the best way I can answer that question to you, why are they not on the list, is imagine trying to transfer money from your bank account to Russia. All right. I work at a bank, and if you ever try to do this at your local bank, you try to transfer money from your bank account to Russia, well, all I can say is good luck. All right. If you try to transfer money from your bank account to North Korea, good luck, my guy, because it'll be almost impossible. All right. They have so much sanctions going on there. And as a result, that's one of the reasons why you don't see them on the chart itself. However, what I have noticed is that the countries that have the lowest tariffs, for example, you take a look at United Kingdoms, I don't really know what they manufacture over there. I don't really know what we buy from UK. So essentially, the countries that we don't really buy too much from, they don't really have too big of tariffs. It's really the countries that have a lot of manufacturing going on. And I can see Trump's point of view on trying to bring those jobs back into the United States. Now, before Liberation Day, I thought we were getting close to the bottom. However, now that we have went through Liberation Day, I actually think this might just be the start, because there are going to be two ways other countries will respond. The first way is they can essentially do nothing, right? They can give in to Trump's demands, and that is a possibility. And that would be amazing if everybody lowers their tariffs and we have essentially a free trade throughout the whole globe. That would be great news for the stock market. Or the second possibility, which is that other countries retaliate against the US. And if that happens, you essentially have retaliation after retaliation after retaliation. And that creates so much uncertainty. For example, you have China being tariffed at 34% right now. It's expected to be going up to 54%. If that happens, China goes ahead and retaliates against the US. And in that case, now you have companies like Tesla, companies like Apple being potential victims, being potential targets against the retaliation. And this in turn causes so much more volatility and so much more uncertainty in the markets. Now, because we don't exactly know how the other countries will respond to these tariffs, it creates so much more uncertainty. And as investors, one of the things they typically do is assume the worst case scenario. So I am actually expecting more downfall to come. But that does not necessarily mean it's the worst case scenario. Because here's the thing, for the longest time, young people have been saying, hey, Andy, I don't want to buy into the stock market because it's so overpriced. I don't want to buy into the stock market because it's at all-time highs right now, right? This is just 2 months ago. People were telling me this is at all-time highs. But consider this. People were saying that right now you have companies that have fallen down in price about 20% down, 30% down, even 40% down from all-time highs. So if you were complaining about too high of prices, this is kind of like a great reset, right? It allows people that have missed out on the stock market to actually have a chance to buy in and buy at prices that we haven't seen in so long. So my thoughts on this is that yes, you could take a look at this negatively. You could take a look at this pessimistically, right? Saying that this is the start of a recession. This is the start of a downfall of the US. Sure, you could say it that way. However, I disagree with that. I actually see this as a good opportunity, especially for younger investors. I think about myself right now. I think about how I have 40, 50 plus years to invest. And you're telling me that I get to buy amazing prices during my prime earning years, during the time that I am able to work and make money. That is amazing news because I would much rather buy into the stock market going down than at all-time high prices. Because you got to realize that the number one rule of investing is to make money. Like we're all investing to make money. That is the ultimate goal, right? And the best way you can make money, as Warren Buffett has said, is buy low, sell high. That is still the goal, you guys. Still the goal. Buy low, sell high. The issue is when stocks come down low, which I consider low, you have investors who say, don't buy. You have investors that say, stop buying. It's going to go down more, right? So that is something that is a bit confusing to me. That is the part where I find it a bit funny. Where okay, the stocks have now come down lower. Are we not buying? What are we doing? Are we selling at the lows? Is that what we're actually doing? Because the goal of investing, again, you guys, I have to keep on reminding you, is buy low, sell high. And one thing I always tell beginner investors is that buying low, selling high, although it sounds so simple, when you put it into action, it's really not. It's really not because it messes up with your emotions. It really, you have to be a very emotionally strong person to be buying into stock going down. Because the issue is that people have fear of losing money. And the fear of losing money stops us and stops our body from making the decisions that's in our best interest. I'll give you an example. Can you imagine the investors that were buying into the stock market during 2008, during 2020, right? Those were not good times to buy into the stock market. I remember buying into the stock market in March of 2020. It was not a good time. People were telling me, Andy, what are you doing? Like you lost your mind. We have a freaking COVID era, we have a lockdown, and there is no vaccine. What are you doing putting your money in the stock market? But it ended up being one of the best decisions of my life because I got to buy amazing compounding machines at super, super low prices that I haven't seen in so long. And as a result, I am treating this same situation in a similar manner because as a long-term investor, I don't need this money anytime soon. I am always bullish on the US economy and the US consumer. Because one thing I got to tell you guys about the US consumer is that they could be so broke, but they're going to take out that credit card and they're going to spend on the economy. We are one of the very few countries where the rich people look poor because they dress like regular people, and the poor people look like they're rich, right? They're all iced out. They got all the bling blings. So this is one of the rare countries where the US consumer is just so strong. I just never seen a consumer base like the US one, where you could be, struggling. You could be having no job. You take out that credit card. You go out on vacation. Go to restaurants. You order that DoorDash, right? So because of that, I'm not giving up on the US consumer. I'm still invested in. I plan on buying more. I'm excited to be buying more. And we'll see about 5 years from now if Andy from today has made the right decisions because I am so happy that Andy from 2020 bought into the stock market in March of 2020. I am so happy that he started investing, even though the stock market was falling down. We need to discuss about Costco stock. And during good economies, people always tell me, like, Andy, I don't want to buy Costco stock because Costco stock is so overvalued. It's trading at 56 times earnings. It is, it's just a grocery store. But the thing people don't realize about Costco, and something I see inside of Costco, in my personal opinion, is that Costco is a company that can make money during good economies and the bad economies. There are so many companies that can make money during good economies, but the moment a bad economy happens, the moment there's uncertainty like we're having now, they literally start falling off the cliffs, right? There's just so many. I can name countless ones. But companies like Costco, the predictable ones, that doesn't matter if people lose their jobs, doesn't matter if, you have COVID going on, people still need to eat. People still need to buy groceries, right? And as a result of that, Costco selling stuff at the lowest margins is always a popular store by consumers. They love the company. They love shopping there. I love shopping there, right? And as a result, you don't see the company price stock going down that much. Like the price of Costco, yes, I know it's gone down, but it's actually gone down not so much compared to other companies. It's still at a 56 times earnings. Now, one of the reasons I believe in this is because not only are they predictable in revenue, because people still shop there during bad economies, the way they make their money is through reoccurring revenue. All right, it's through their memberships itself. It's because even if nobody at Costco shops there, Costco, the main way they make money is through the memberships itself, and the membership is reoccurring. And the nice thing about Costco is they have a very high retention rate in their membership. It's over 90% in retention rate. So even if people don't shop there, they're still going to go and pay the membership fees. It's just because of how predictable company is and how much value the company provides. So yes, the company is trading at a high valuation. Yes, the company is overvalued, in my opinion, but it's overvalued for a reason, right? Because this is a company that can make money during a good economy and a bad economy. And I will 100% always pay for premium for that type of predictability, right? And then I also want to discuss lastly about my stock Robinhood. Robinhood has not been doing so well. And Liberation Day has really crushed Robinhood. It dropped Robinhood by 10%. And one of the reasons why is because Robinhood is going to really get impacted big time by inflation. And here's why. All right. When you have a ton of high inflations, like you have the 32% to Taiwan, the 34% to China, the Vietnam tariffs, right? A ton of huge tariffs. It increases inflation. And if inflation goes higher, then the Federal Reserve will have to increase rates to combat the inflation. And if they increase rates, the federal funds rate, people that would have invested in stocks, some of those people might say, hey, you know what, Andy, instead of buying stocks, let me just put my money in a high yield savings account, right? Earning 5-6%. Let me just put my money in a certificate of deposit. Let me just put my money in a bond, making decent amount because I don't need to invest in the stock market. I'm okay with the 5%, 6% yields. And that is one of the biggest issue with Robinhood. And Robinhood excels in low rate interest rates. So because of that, you see the company literally dropping 10% right after Liberation Day. And I'm still happy about the company. I'm still believing in Robinhood, and we'll see where it goes. I'm gonna keep on buying into Robinhood. I believe that as more time goes on, the company will bring in more clientele, more younger clientele. My ultimate thesis on Robinhood stock is that I've used multiple brokerages in the past, but all of them, Robinhood has been the most user friendly. Robinhood has been the most easiest one to use. And when I see a product that is just so different from all of its peers and how it's better than all of its peers, I want to gravitate towards Robinhood. And yes, when I look at the valuations right now, it's trading at like a 28 times earnings when its competitors like Goldman Sachs, it's like what, 10 or less than 10 times earnings. So I get it. Robinhood is overpriced, but it's not so overpriced like the Palantirs of the world. It's not so crazy like the Teslas of the world. And my thesis on this is that because it's the best brokerage in my mind, and I believe so, and I believe other investors will realize it's the best one as well, and how they're able to attract more customers. I mean, you look at Robinhood, they only have less than 26 million users, you guys. And when you do take a look at the amount of money that Robinhood brings in, or amount of assets in custody, it has less than $200 billion assets in custody, especially when all of its peers, the big players, have trillion-dollar assets under management. So because of that, I am very, very confident that Robinhood is able to use its advantage by having the best mobile app out there to bring in some of those customers from those traditional old-time brokerages into its own ecosystem. And one of the things I love about Robinhood is that Robinhood gets a lot of inspiration from Costco. And they love how Costco is a reoccurring compounding machine through the membership itself. And they have their own membership thing going on right now with Robinhood Gold. And it just seems that every single quarter, this Robinhood Gold keeps on growing after growing after growing. And I plan on investing through Robinhood for a very, very long time. And that's one of my reasons for why I had invested in Robinhood itself. And with that, you guys, thank you so much for watching. I will see you guys on the next episode. Bye bye.